So 2023 was a crazy year for housing, and now everyone's starting to think about, well, what does this next year look like? More of the same? Are things going to change? What's going to happen to interest rates? Will there be more inventory on the market? How will buyers be able to fight their way into a home? Are we all going to be a nation of renters with these big institutions buying up all the homes? What does the future actually hold for housing? I wanted to put together a really brief and hopefully easy to understand synopsis of the market where it sits right now. And as we look ahead, because we're entering some pretty interesting times with something that happens every 4 years, and that is an election cycle. And that will definitely play into housing because of policies that are going to be introduced, ideas, demagoguing, all the mudslinging, you name it. It's going to be entertaining, but it's also going to have a major impact on how the bond markets are going to react and ultimately what happens to mortgage rates and housing decisions. Plus, we have an economy that's starting to slow down, so hiring might start to freeze. Layoffs may continue. This ultimately is going to control housing decisions as well. And then of course, there's always supply and demand, which is going to remain tricky. So let's get into it. Here are my predictions and thoughts for what to expect from the housing market in 2024. My name is Arjun Dhingra. I am a mortgage banker of 23 years. I live in Northern California with my wife and 2 daughters. I'm a 2-time world champion in Taekwondo and the former co-head coach for Team USA, and have been dedicated to creating content that helps educate home buyers and general consumers about financial literacy and making smarter decisions around taking out mortgage debt. But ultimately, I believe that real estate is one of the best known ways and will remain so for creating not only personal wealth, but generational. So in 2023, we saw interest rates spike to 25-year highs, and I'm talking about mortgage rates. We also saw the Fed raise rates at a very fast clip because they were active and really engaged in trying to fight inflation. Now, the Fed promised everyone that if they do large rate hikes at the front end of the cycle, that they could sit back and allow them to run their course and that it would eventually start to bite and get inflation under control. They held their promise for the most part, although there were a few small hikes towards the end of this recent cycle that many argue were unnecessary. The work they've done, however, is starting to show its actual intended consequence, which is that inflation is getting under control. Month-over-month data is coming back and showing us that it is starting to cool and actually reverse course. This has caused a slight decrease in mortgage rates. But for the most part, 2023 was really tricky. Inventory in many markets was completely gridlocked. High borrowing costs or mortgage rates froze a lot of would-be buyers either because they could no longer afford those price points or they were just outright scared. And the interesting thing that happened this last year broke against the traditional grain of understanding, because normally when you see mortgage rates increase to the levels, especially as fast as they hit those levels that they did this year, you will see prices start to come down. But that didn't actually happen. And that's what ultimately made 2023 a real head scratcher of a housing year. You had high rates, but prices didn't actually decrease. In most markets, they actually increased or just held the line. So now let's get into 2024 and where we go from here. First, we start with the overall economy. As a result of everything that's transpired over the last year in 2023, we are seeing an economy that is starting to slow down here in the United States. Job losses have been mounting within various sectors. Hiring has slowed, and a lot of major companies are sitting on their cash rather than reinvest it into their employees, technology, or expansion. Employment also hit its lowest level of the current economic cycle, and that has historically been a precursor to an imminent recession. Data is showing that we're already starting to see a slight uptick in unemployment. Looming election cycle, policies being introduced from both sides that are either going to hold the current line or potentially change course altogether. Very difficult for companies to really navigate and decide what they want to do. Some of them are very cautious. Previous recessions or economic downturns, I think we're going to see a lot of hiring just continue to remain slow. Already seen an exodus from major markets, citizens leaving and flocking to suburbs, also small business closures, result of rising costs, safety issues. Take all of that into account, have to search for certain sectors of the economy that are immune to this. Just been humming along with workers within that sector continuing to earn and feel very secure about their job prospects, where we will likely see a lot of buyers emerging from in 2024. Next is going to be the continuing rise and expansion of suburbia. The pandemic taught us that come hell or high water, people are going to want space. Need space to live, to be able to continue to work, potentially work out from home, actually have a little bit of distance between their significant other or spouse. Noticing this trend, we've seen planning and development departments for various cities as investors really try and make suburbs much nicer, bringing more amenities, lifestyle, access to things that people don't need to necessarily flock to a city to be able to get, but can experience right there from where they live. In English, suburbs are getting a lot nicer and more desirable. Across the country, we're not only seeing a lot of growth and movement towards these markets, but prices have been increasing because of all of that demand. I believe this trend will continue into 2024 and beyond. This is the old economic 101 lesson of supply and demand. Once we have some type of a major job loss recession or a shock to the labor market, it's really difficult to find a way to see a lot of inventory just all of a sudden hit the market. And that with the builder industry remaining cautious and really calculated in how they build new product and bring it to the market, slow and methodical pace, people feeling a little bit trapped with their unbelievably low interest rate on their current home, just isn't enough of a stimulant within the economy to suddenly unlock inventory or create it from people putting their homes on the market and wanting to move. Again, unless there is some type of a major job loss recession that's going to force people's hands and make them relocate to other markets. Of course, life will continue to happen. People will get married, people will have children, they will get divorced, there will be debts, there will be all kinds of expansion, reasons to prompt people to move, irrespective of what's going on in the broader economy or with interest rates. That part of the market is what we're going to see continue to move housing. Certainly won't be a bandwagoning effect like we got in 2020 when the pandemic hit and the shutdowns were widespread and people just started flocking to get more space. The whole toilet paper thing, when people were bandwagoning for that, it wasn't such a great idea in the end, right? Won't see a lot of bandwagoning when it comes to housing this year. They're going to sell and move are going to be highly motivated to do so. They're not going to be leisurely testing the waters to make such an investment or lifestyle change. Brings us to demand. 157 million people working in the United States and people dating, mating, and creating new household formations. Going to be a massive imbalance of people who have their hand in the air saying, I want to own a home in the near future, with the available inventory that can meet that demand. As long as you have that, you're going to have prices remain high, to climb, worst, just flatline. As I said, in order for the market to really come down in the way of price points, you just somehow, suddenly, a lot of inventory hit the market and nobody at this present time, including yours truly, can pinpoint where or how that would exactly happen. A factor to keep in mind for this 2024 unholds are the institutional investors, so Wall Street and large funds. These investors and all of this capital, to the tune of billions of dollars, have been sitting on the sidelines patiently waiting for a little bit of a pullback in the housing market to come in and scoop up homes. Doing this for many, many years silently. They're slowly starting to pay attention and recognize that they're not just competing against the everyday buyer when it comes to looking at a home, but the big bats of Wall Street and these other institutional investors. Of course, can pay cash, pay those transactions rapidly. Competition for buyers is going to get steeper because, again, inventory to meet that demand, household formations occurring, inclusion of these institutional investors on the sideline, this makes for a very competitive housing market. Last, before we summarize all of this, is going to be the media. You have to remember that when it comes to housing, the media is not your friend. Like with everything else, higher motivation is designed to scare you and get you to click on something or hold your attention, and everyone knows that bad news sells. Couple this with an election cycle that's going to be bloody and muddy, a perfect storm for what the media has been salivating over, which is a lot of attention, networks, and huge advertising dollars coming in to capture and capitalize on that attention. Expect all kinds of misdirection from the media because of what's going on in the economic and political cycle and how that ultimately is going to spill into housing. You remember, like I said, that bad news sells. You will continue to hear trending lines and headlines that are out there telling you that the sky is falling when it comes to housing, or that it continues to be a terrible time to invest in housing, or that there's nothing available for home buyers out there, or that affordability and the American dream are just too far out of reach. This is where all of the deals will happen. 2023 closed out, and what I now see heading into 2024, the biggest takeaway for anyone that remains engaged in the housing market are going to be the types of deals that you can strike. Interest rates have trended a little bit lower, but for many buyers, they still feel too high because they're comparing them to rates from the past that their friends, neighbors, or family members were able to obtain. Continue to remain in a space where it's unaffordable to own a home even with lower rates. As a buyer, if everything lines up correctly for you, are going to be striking a much better deal in 2024 than most people got at the beginning of 2023. Towards the tail end of this year, I've noticed insane deals that people have been able to get in the way of great concessions, credits towards closing costs, or temporary or permanent interest rate buy downs. Left behind to be able to furnish a home or redo an entire roof, landscape a property. These are all things that you would have never been able to ask for or would have been thought of as crazy if you even suggested it back just a few years ago. Do believe that these types of deals and the opportunity to strike them is going to remain large in 2024. In summary, we're going to have a media that is going to be raining on all of these data points of a growing suburbia nation. Supply and demand remaining really conflicted with super tight supply and really excessively high demand in relation to that supply. Economy that is in fact slowing down, a media that's just going to add hysterics to all of it. If you're a serious and committed buyer, then 2024 could be your year to strike probably what are going to be some of the better deals that are out there. Not only be able to attain a property at a negotiated price point or with some really good incentives, or perhaps both, and have the opportunity to structure the one thing that there's flexibility with only one time, and that is the sales price of the home. Interest rates, on the other hand, are temporary and can be renegotiated or refinanced, restructured at various times throughout your tenure in a home. Price of a home and the opportunity to negotiate it or concessions attached to it or other parameters around this housing deal can only happen once. And they can only truly happen in a market like the one we're in now. Just remember that for every 1% up or down that interest rates travel, you either have 5 million people entering or exiting a market, additional buyers. Rates remain a little bit higher, there's decreased competition. Wait for rates to trend lower and increase affordability, just know that your competition pool is going to be a lot more crowded. And it comes down to life, right for you as a buyer. There's no perfect time to buy, as I always say in all of my content. They're lining up well for you, and if you're serious about making this your year, I really believe you're going to be able to strike a fantastic deal if you're patient and you work with the right people. My outlook on 2024 and looking ahead for the housing market, make sure to click below that you like this video and subscribe to my channel so that I can help reach more people like yourself and inform them to make better decisions around taking out mortgage debt and growing their overall personal wealth. And for more updates throughout each quarter of 2024, especially with that crazy election that we've got coming up, and I'll see you guys on the next video.